Hi everyone, Doug Eckelberger and Habit Real Estate bringing you the latest Stephen Thomas report. Go ahead and click on the link down below. You will get a copy of his report and charts and graphs to go along with it. Tells you all you need to know about Orange County real estate and what's happening today. So we are seeing some big changes in the market right now. His title of the report is Fracture in the Market. Obviously, now looking back, we saw that March was one of our slowest Marches in spring in a long time. We did see demand starting to make that turn as we started to have a lot of the economic news coming out, and changes that were happening were affecting not only the way people thought about where real estate might be going, but was also personally affecting them, and they are making decisions to either hold off on purchases. We saw interest rates go up, maybe a little hesitation and stepping out and making that purchase right now. But also the higher interest rates that are there stop people from putting their homes on the market. They didn't have a place to go, and they didn't want to pay the higher interest rates if they were locked in, let's say at some of those 2.5% to 3.5% interest rates. That all being said, we have the regular homes that are coming on the market in spring, and that inventory has been doing what it has in the past. We have more inventory this year than we did last year. What has changed though is the demand, the pace of demand. That means homes going under contract started to slow about 3 to 4 weeks ago, and it's continued that path. So when we typically would have peaked out in demand in, let's say, June or maybe July, August, somewhere in that range, it's already slowed back down. And what's happening is the days on market, if you back up maybe 2 months ago, where we were at 80 days on market on average, and it was on its way down, and we were at 60, and we thought it would hit maybe as low as 40, which would be typically the spring market at that kind of fast pace. That has definitely shot right back up, meaning a lot of the homes that came on the market in, let's say, March or maybe late February, March, April, have not been going under contract as quick. So inventory is adding up and days on market are stretching out. So listing homes right now, your kind of choices are you either list a little bit more aggressively on your price point to try and get it under contract quickly, or you're listing at where you feel market value is and your expectations are this is going to take, you know, a lot longer or a longer period than expected, maybe 2 to 3 times what expectations are. That all being said, it is a new shift for everyone that's out there. Both sellers and agents are not conditioned to having properties sit on the market for 30, 40, 60, 80 days. That just hasn't been where our market was for the last, let's say, 4 to 5 years. Prior to that, it wasn't uncommon to have a home sit on the market 80 to 100 days before it saw an offer. But we just had a very fast-paced market over the last 5 years, and it's really shifted the way people expect to sell their homes, and buyers then question a home that's 30 days on market. And if you have to remember that that's not uncommon when the market has some sort of pause. Doesn't mean there's something wrong with the house, just means it's going to take a lot longer. The buyer pool's a lot smaller for that particular house, and it takes longer to find the right match. In moving forward as we head into summer, you're going to see inventory continue to rise as homes stay on the market a lot longer. Demand will definitely be dictated by what's going on in the financial market, interest rates. You'll still have that certain percentage, let's just call it maybe 25 to 30% of the market that will always move. You know, relocations, jobs happening in new places where they have to move, or you have people moving into our area, or families growing or downsizing. So that kind of a spin of a market will happen regardless in good and bad markets. What happens though is when, let's say, interest rates go down, you add on that extra percentage, that 25% that would like to move now is making that move, and then our market heats up. I think we're going to be in this kind of steady, slow-paced market until the uncertainty in the business markets starts to stabilize, and then you'll have people jump back in. So look for the next couple of months to be a little bit slower than expected. Doesn't mean homes don't sell. It's just not going to be at the pace that everyone was anticipating or saw the first couple of months of this year. If you have any questions regarding either purchasing or pricing your home to sell, give me a call. My name's Doug Eckelberger. I'm with Inhabit Real Estate. Have a great week.